be sitting back down with you, man.
Yeah. First off, look at that gear.
Dude, I know. I'm
Let's
loving
go.
the shirt. Be sure for everybody listening or watching to check out the Blake Shultz team. And maybe you can order some shirts offline or something. I don't know. If you guys have a gift store,
those
web
are
store
free with the house.
Free with the house.
Free with
okay.
the house.
Just,
Except you.
Buy the house just to get the shirt.
Yeah, that's right.
Yeah. Well, dude, yeah, always good conversation to kind of hear about what you have going on in the world of realty and investing and all the different things you're doing.
Good to be back.
On our last conversation, we were kind of talking about some of the things going on, just Birmingham in general, you know, all the different things that are happening. It seems like our city is just exploding. We talked about the Caraway Hospital project that they just recently started demolition on, which is cool. I know you've got some property over in that area, so I'm sure you're excited to finally see some movement.
Yeah, absolutely.
I think everybody in Birmingham is ready for Caraway to not be a giant horror, you know, movie scene or something. Right. But what do you have going on lately, man? What have you been up to?
Man, I'm fired up. We've got a commercial deal under contract. We're closing in a couple weeks, and we really wrapped around some creative financing and brought in some other aspects to it. And it's got me even more, you know, we've talked about where I'm headed, and I've always alluded to more commercial, more multifamily, kind of bigger deals. And this puts us down that path. And the way we structured it, man, I'm excited about it. I'm fired up.
Is this have you invested in commercial properties before this one that you're talking about?
Yeah. My dad and I bought a 7-unit commercial building, like 75-ish 100 square foot in Roebuck, about 4 or 5 years ago. And it's always been kind of on the back. We bought it out of foreclosure for, I think, $94,000. And it was at such a discount that we got the bank to fund the purchase, and I think we put in like 30 or 40 to get it rentable.
Is this like a little strip mall or something?
What
am I picturing?
Yeah, so if you get off Roebuck Parkway, there's a Chick-fil-A right there, and I think it's like Chick-fil-A, gas station, up the hill, Crab Trap, and then our building. Okay. And this building, it was, like I said, we bought it out of foreclosure. It was vacant since 2012, where then, you can look this up online, but it was raided by the FBI because it was an Asian massage parlor that had little extracurriculars going on in it.
Okay, all the things you would imagine. Really, man.
Dude, it was wild. And we can dive into that property. But cleaning, the day when we opened the doors, it was like that business. I mean, towels were folded. Like,
wow.
I mean, they just walked out. Like, FBI came in while they were operating, and everyone just pulled out. Doors were locked. It had not been opened since. This is what it looked like.
That is
Stuff
crazy.
was in the refrigerator for 8 years. 10. I mean, it's disgusting. But it was. I mean, it was a business like set up.
Since
crazy.
2012, it's just been sitting there like
Dude,
that.
yeah. So yeah, crazy stuff we found in that one. But demoed it out, made it basically a big blank canvas. Got the back, so it's a shotgun style building. So you're looking at it from the road, and it's like a box in the front, 2 stories, and that front space was the road frontage, and it's got a glass front, and then there's offices upstairs. And then shotgun style means it's real deep and kind of skinny. And the topography goes up away from you, kind of uphill, and so that front box is about 4,000 square feet of the total space, about 2 up, 2 down, and then the back levels off to 1 level, and it's 4 different units with the remaining square footage spread evenly through those. And
so it's the entire building.
So the whole building, the whole property,
the whole property for $90,000.
Yeah.
Wow, dude,
and it needed work. It needed work. But
still, that sounds like where can you go buy a building for $90,000?
Right. Well,
again,
wild. We've talked about that gut feeling. I'm like, I don't know the comps. I don't know commercial from my right foot, but we're buying a 7-unit, 7,000 square foot building for $90,000. How can we lose? And it's kind of funny because we renovated the back little 4 spots, got them leased out, got a property management company running those, and they're doing a pretty good job because it's commercial space instead of smaller residential. And then the front box, that 4,000 square feet, like over half the space, sat empty for like 3 years, and it was just barely breaking even. We're probably losing a couple $100 a month, and it just sat on the back burner. It was like not the focus. My sales team was growing. I own it with my dad. He's still, to this day, full-time engineer with Alabama Power. So it was just kind of on the back burner. And it was like, we're not losing too much. We just haven't focused on it. anyways, about a year ago, we finally got that bottom space that was that nasty parlor leased out. So now it's cash flowing. We still got 2,000 square feet above of office space still open that we're trying to get leased out. But yeah, so we've got that one. Buying our second official commercial, like retail, I guess is the right word, because once you go over 5 units in residential, multifamily, it's considered commercial.
Okay.
So technically, we've had
Okay, so retail space, I guess.
Yeah,
That's
yeah,
being
so-
rented by businesses.
So this next one is our next retail, and it's a 6-unit building down in Alabaster. A restaurant takes up 4 of the units. They've been there for 15 years, and then the other 2 units, there's a tattoo guy and a hair salon and they're about 1,000 square foot per unit, so about 6,000 square foot total.
Coming from the residential background, how do these commercial units pop up on your radar?
Random.
Or these real
So,
estate or the retail units pop up on your radar?
That first one we bought at a foreclosure, I actually found on Bigger Pockets. So biggerpockets.com is that site I've told you about. They've got the books, the publishing company, the blog, the podcast, just everything. And that's where I tell people, if you want an education in real estate, after you listen to me, go listen to them. Right? They've got everything there. And so,
But they have like local listings?
well,
for
they've got a
different areas?
forum, and you can put keyword, like I put in there anytime the word Birmingham is mentioned, email me. And someone said, this company out of Utah said, hey, we've got this deal in Birmingham. Does anyone want it? And I just followed up.
Wow.
And
How about that?
Yeah, one thing led to another, and I own a massage parlor. So
Okay, there you go.
yeah,
Well, leading to the property, you just acquired another one.
Mm-hmm.
And I guess this will be your second retail space that you've looked into. And you were kind of telling me over lunch the other day about the creative way that you guys made this deal happen. Give me the nuts and bolts. What went down? How did you guys acquire this place?
yeah. So this was owned by a friend / builder / investor who I've known for 5 or 6 years. He's on the back end of his career, had a crazy successful career. Respect this builder probably more than
Does he own
anyone.
like half the city? You know?
He doesn't own a ton. Well, actually, I honestly don't. I know he owns a bunch of property, but he's just, I mean, one of the best quality builders I've known. And so really respect the guy. And every time I talk to him, his goal is somewhat like mine. I never sell, just buy and hold forever. But I'm always asking, hey, if you ever want to sell anything, let me know. So he called me up. He said, hey, we're dividing some assets between, because he's got partners and different things. And he said to do it, we're unfortunately going to have to sell one of our buildings. Before we put it out there, are you interested? Of course, I say, yeah, send me the details. What is it? And he sends me, it's this building. And I said, what do you want for it? And he said, we're going to go to market for, do you want all the numbers?
Yeah.
Okay. So we're going to go to market for $850,000. So that's what I would like if we're going to do it off market. So, okay, let me dive into it a little bit more. Send me the financials, because really the value of a property is derived, especially in retail and commercial, based off the financials. And also, does it make more than it costs, essentially? And so he sent me all the income and the leases, and I've started underwriting, that term, kind of going through all the numbers, and then started talking to bankers and saying, hey, if I finance this, what are your terms? What does that look like? And
What would you expect a typical term to look like for something like
for
this?
commercial prime rate, like Wall Street prime, they kind of set the rate, and then, which at the time was 5.5, and then they'll add a point, or like 1% or a half point or something like that on top of there for their kind of margin or their profit. So somewhere around there, and then a 20-year amortization. So like you get a 30-year conventional loan, it's amortized over 30 years. Commercial typically is only 20, which means your payment, it's paid off sooner, but your payment's higher.
Sure. That's just a standard for commercial
yep.
type space.
And then usually they want to see 20% down. Depending on the deal, sometimes it goes all the way up to 30. Like depending on, like if you do like a huge deal, like $10 million deal, they want like 30% down.
Sure, who would?
A lot of times. The 2 banks I called were guys that had transferred from banks I've worked with for a long time. They went to not brand new banks, but new banks to this area. So out-of-state banks that are growing in Birmingham that are hungry to build up their Birmingham portfolio. And so this is one of the tricks and tips that I'll give all those people out there. But instead of going to them saying, hey, what would you give me? I went to them and said, this is what I want. How close can you get? And I'm way unrealistic. I'm giving away some secrets here. Hopefully they don't listen to this. But I went with just crazy unrealistic. I want 5% down. I want prime rate. I want a 30-year amortization, right? And just
All the things.
yeah, just give me the best thing you can, and that's what I'm going for. Knowing they're going to say no, but will they come back with something better than what the normal is expected? And they did. They came back 25-year amortization, which is huge.
Extra 5 years there. Okay.
15% down instead of 20, which on an $850,000 deal is $44,000. So that's $44,000 already I could finance and not have to bring to the table. Because at the end of the day, they want 20% of 850 is $170,000. Like
Down.
That's down.
Yeah.
Like that's a lot of money.
Come on, man. You're
And-
liquid. You
yeah,
got
right.
that.
Yeah. So I'm like, all right, how can I shrink that? And the traditional way is OPM or other people's money. So I'd say,
Other
Alex,
people's money.
yeah, you got a bunch of money, like you want to invest it. Lend me $170,000 and I'll give you a piece of this deal. So I don't have to come, or lend me 85 and I'll do 85 and we'll split it. That's kind of the traditional way, or syndication. That's how you syndicate a deal is syndicate people's money, create a fund, and then you take down deals.
Okay. Vocabulary.
But I didn't want to, I want as little of OPM that I get to use, the more of the deal I get to retain.
Right.
And so at a certain point, it's not worth losing a deal by not having other people, but if I can structure it by not having to do that, I will. So that saved me 44 there. So then 15%'s like $125,000, $130,000, still more than I want to put into this. And so then I go back to the seller and I say, hey, here's the deal. Still love it. The numbers work. I'm cool with the purchase price. I've got my terms from the bank. I don't want to have to put this much down. Will you finance? Will you hold back, or it's called a seller carryback, 10%? So basically a second mortgage. So I've got a mortgage with the bank for 75%. Is that math right? No, 85% of the purchase price. I've got the seller. I'm asking him, will you hold back another 10%? So that gets me up to 95% of it. And so he's going to finance $85,000. And then I've got to come up with the difference, which is 5%, which is $44,000. So I'm like, all right, I can buy this $850,000 property, which all my numbers shake out, and it should cash flow for $44,000. Okay, cool. I'm partnering with my dad, so we're going to split that. So it's 22 each. Sweet. So I'm going to bring $22,000 to the table. I'm a realtor. There's a commission of 3% on this sale of $850,000, which equals about $25,000. And so at closing, they're going to pay me $3,000 to buy this property for $850,000.
Wow, dude.
Isn't that nuts?
That is nuts.
Now, reality is my dad was like, no, we're splitting that. I'm still coming up with some cash. But that's how we're structuring that deal, man. And I'm just fired up being able to get creative and work. And that came from the terms we worked out with the seller are great. I mean, it's amortized over 20 years, balloon in 5 years, meaning I'll pay them off totally in 5 years if they want it. Prime rate. So terms are great. It works. It makes the deal cash flow a little bit less because we financed an extra of $85,000, but it still cash flows about $1,500, which, if you look at it from a cash on cash return, it's awesome. It's like over 30% after all the closing costs and everything shake out. But if you look at it from just a return on investment, $1,500 a month is $17,000 a year off an $850,000 property. That return's not super sexy. But jump back a couple episodes when I talked about what my goals are. It's not necessarily cash flow. I want this thing to get paid off over time and appreciate. And I've got this paid for asset that's worth, once we get there, hopefully over $1 million.
Yeah.
So fired up about that one. That one's, hot on my mind.
So
right
definitely in there for the long term with some of these bigger projects.
That's right.
Stuff like that. You have anything else on the
that
coming up? That's probably
uh,
the biggest one that you've done recently. Yeah.
Yeah, it is. We're flipping one in Irondale now. We're kind of on the back end of it. Got about 2 weeks left until we're done with that one. And then really just trying to source. I'm trying to grow my team, trying to bring in some commercial and investment guys on my sales team, and that'll help kind of build that whole. And then they have the investor mindset as well for their own portfolio. And so I think that's going to help shape and set new goals and boundaries on where my personal investing and where our group sales can go.
Yeah.
Because one of them's coming from the retail space. Hopefully if he comes on, and that's going to provide opportunities for him to, help with my knowledge, kind of getting into ownership for himself, and then bringing in the deals to the team. And so I'm excited about where we're headed. Yeah.
Well, how big is your team currently?
Yeah. So there's 5 of us right now.
5. Okay.
So we've got some assistants that just work for us, and then buyer's agents that just work for us. And my goal is, there is no standard team structure. That's what I learned as I started creating a team. Is, all right, where's the playbook? How do I do it? And they say there isn't one.
Okay.
Just figure it out. And so a lot of teams are structured as there's a team lead, and then you get as many agents as you can, and hopefully they produce, and you rock
You
and
get a
roll.
cut of each one, kind of.
Yeah. I don't, and that's more of like a manager. I enjoy selling. I enjoy listing, like we've talked about, and I don't want to lose that piece of it. And if I have 30, 40 people on my team, there's no way that would be a disservice to those agents, because they wouldn't get my time and attention, because it would go towards my own business.
Sure.
Instead of
at some
feeding them
point,
business. Right.
Yeah. it
So
plateaus.
I want to be very effective. I want a well-oiled machine with no more than 5 or 6 buyer's agents, and we're just going. I've got a listing expert eventually that's probably going to step in the role I'm in, and we're cranking it out. And every one of them's just at the top of their game, killing it. And it's not it's quality over quantity.
Yeah.
Is my goal.
It still seems like managing a team like that and being involved in helping people list and buy and sell. Seems like it'd be a big undertaking, like a lot to do, but yet you still find time to, take on these projects like this commercial space that you just talked about, or this retail space. And then you mentioned a minute ago a place in Irondale, or that you and your dad are working on. So you're still taking on these other projects.
Yeah.
Where do you find the time to do all this, man?
Well, yeah. So that's risk versus return, time versus money, and what the return is going to give us. So as I think I've mentioned this in some of our previous talks, but flipping's not my goal to build a flipping business, but I will take on a project if I can set my construction head or my contractor there and say, here's what I want, call me when you're done. Yeah, right. And in reality, I'm over there maybe once a week, but that's the idea. Is it's not
Well, you kind of built up a team that is
Right.
kind of
Right.
responsible for doing those flips and
yeah.
remodels.
And so
stuff.
that's the idea. Is I'm not going to take on a project, a flip that's going to grab hours out of every single day for me, because it's not worth it. While it may be a great return on that one project, it's going to pull me away from pouring into my team or pouring into the bigger commercial picture of in the investing side, that the opportunity cost lost doing that is not worth it. I mean, even if it's going to crank out, an 80% return, like it doesn't matter, because I'm trading so much opportunity cost for that one thing that doesn't have any residual or passive component to it. But it's, you do it, you sell it, you make a chunk of money, great. But how much did I give up, and how much traction did I lose building towards what our actual goals are by spending so much time on that project? And so that's why you won't see me out there swinging hammers anymore.
Yeah, I can imagine. It seems like you've got your whole philosophy and the way you do things very streamlined. But I can imagine in the early days, it probably wasn't always like that. Learning like, okay, here's how to best manage my time and what I'm capable of doing, and projects to take on, and being, I guess, more picky in the things that you, whether it's the clients that you work with your realty side, or the properties that you take on and invest in. I can imagine in the early days it was maybe a little hectic. Did you ever feel like you were being pulled in a million directions?
Oh my gosh, so much, yeah. And it was during that time, and it was probably a 3 or 4, right close to 5-year period where I was trying to wear way too many hats. And it was in the beginning of getting the contractor's license, and then people asking me to remodel their home for them, and just saying yes, and just because I was still growing and building and just scrapping for dollars. And so I can figure out anything, right? I may not know how to do it yet, but I'll figure it out. And so I was just saying yes to anything. And I don't regret that I did, because I learned, the knowledge I've gotten, I was built off of that experience. But yeah, it got to the point where nothing was going to really grow, because it wasn't given the opportunity to, because my time was not there.
Right.
And so it got to the point where it's, hey, I've got to really focus on just a few of these things, and then outsource my weaknesses is the biggest thing. I come from, and my dad is very much a doer. Like, I'm going to figure this out. Like, I don't need to hire somebody like I can do it. I can figure it out. And what it comes down to, and he's the smartest guy in the world. He's an engineer, and he runs all of our background stuff, numbers and all that. But it's where I would go and spend a half day trying to figure something out to save $400 on XYZ. I could go and pay someone $800, and then that 4 hours I could go make $1,000, right?
Yeah.
So it was not valuing my time. And I think that was in the very beginning, my time had no value to me. Like, I did not value my time. And so that was communicated to anyone I worked with or said yes to, and based off my actions. And so being able to reframe that, and that came from hiring coaches, business coaches, entrepreneurial coaches, real estate coaches, teaching me how to value my time and grow a business. And it's, I just finished reading for the third or fourth time a book called Who, Not How. And it's, you see a problem, the first reaction, the first thing I think about used to be, how can I do
fix it? Yeah.
Right. Now what is it? Who can do it for me?
Who can do this better than I can?
Yeah. And who's going to enjoy it? Because half the stuff I was doing, I didn't even enjoy.
Yeah.
And so I'd get done, make next to nothing, be exhausted, probably mad because I didn't even enjoy doing it. And it just, I was in a circle. And so it's, who can I do this? So who's the contractor I can put on this Irondale flip to do it for me? He's going to do it better than me. And what I can do with my time that I enjoy that's way more valuable than laying tile is just going to expedite our growth towards what the real goal is.
I think that's probably a struggle for a lot of people, is to know when to let off the gas and maybe let someone else take over. Interesting side note, I was listening to a podcast with Elon Musk, who's arguably the smartest person currently living. He could fix basically any problem, regardless of what it may be. But in that podcast, he mentioned that a lot of tasks that he takes on with the companies that he, whether it's SpaceX or Tesla, he hires, I think his words were, I hired somebody smarter than me to do this task or to do this thing or to make this more efficient. And I was like, but you're Elon Musk. Like, you could do anything. Like, why would you hire someone else?
Yeah.
And so it was just kind of cool to hear from someone as successful as him to kind of know, hey, this isn't my thing. This isn't my lane. I probably could do it if I really focused, but why? Like, my time is better spent, doing other things. So it's interesting. And I think we could all probably take some advice from that. It's like, kind of learn where your time is most valuable and most efficient, maybe, and outsource when possible.
Yeah, and there's a risk. There's big risk associated with that, and it's taking a leap of faith that you're actually doing dollar-producing activities.
Sure, you hire somebody, you're like, okay, is this a good investment? Is this a waste of time? Should I just do this myself?
Yeah, like I hired one of my first hires was a transaction coordinator for our team, and it's taking something from once you're under contract to the closing table and ordering termite and title and closing and I mean, just there's thousands of things that has to happen.
Yeah, and
that most realtors spend 80% of their day, if they're selling real estate, doing those things. And I'm like, man, one, I'm not good at it. Two, I don't like it. Like, if I got that off my plate, if I go sit in my backyard and suntan naked, that's probably not the best use of my time, and I could just be doing the transaction stuff myself. But instead, if I go meet people and get more clients and show more houses and generate more closings, then the money I'm paying her in comparison to what I could be making by doing that other stuff is just, it's a no-brainer, right?
Yeah.
But it's a risk of, okay, I've got to do those activities. Like, if she's going to replace me to do this, and I've got to use that time wisely. And it's not necessarily money producing, right? It's I would rather be at home with my daughter at 3:00 in the afternoon instead of doing X, Y, and Z until 7, right?
Those priceless moments,
right, right. And I haven't figured out how to make Stella pay me yet, and so she's not.
You figure it
I'm
out.
not making dollars to be there, but it's So what return am I looking for? And that return doesn't have to be in a dollar amount.
Yeah. Well, it's a cool philosophy. You kind of, in some of the notes and stuff we were looking over before we started this podcast, one thing that kind of stuck out with me is a little cool phrase is work less, make more. And I guess that's kind of maybe a philosophy you try to live by. And whether, like I said, not everything is dollar-based value, time with your daughter, for example, finding a way to better spend your time doing any number of things that you find valuable, whether financially or serving some other purpose. But finding ways to, I guess what I keep saying is spend your time more efficiently. You know what I mean? And not just running in circles. So obviously you couldn't do all this alone. You've mentioned your dad a couple of times. Did you pull him into the real estate world, or was he involved in it in some way? Because I don't think that's something we've really talked about.
Yeah.
How did you and your dad partner up getting involved with all this stuff?
Yeah. So this was fun. So we there was a property, the Montreat condos in Vestavia, right there by 65 and 31.
I've probably seen them, but
They're kind of tucked back in there.
Yeah.
There was a townhouse listed as foreclosure back when foreclosures existed, and it was listed on the MLS. I'm trying to remember the numbers because this was a number a year ago, but I think it was in the 90s, I think around 95,000. And the townhouses at the time were going for a little bit more, like 150, 160, maybe closer to 170. And so ran all my numbers, and I was like, this could be a decent flip. This is before I think we bought that condo, so we didn't have any rentals yet. And I checked, there's no, side note, those back townhouses in Montreat have no HOA. So I think I did, actually, we had gone through that.
No HOA?
Because,
all right,
yeah.
let's do this.
Yeah. And so, so there's no HOA. So I go to, again, he's very analytical. He's an engineer. And so I was like, here are all my numbers. Will you double check my numbers? Like, am I missing anything? And he doesn't have a background in construction, but we've just grown up building Habitat for Humanity, all just grown up around doing construction projects. So
he's a numbers guy, but he's not necessarily into the real estate world.
Never has been.
Project.
Never have
Okay.
besides his own personal house.
Okay.
And so I just, hey, will you come look at these numbers? And ran all the numbers, and he looked at it and he goes, you're going to make this much if you flip this? And I said, well, I think so, but check my numbers. Like, that's why I'm here.
He's like, what?
Well, yeah. And he was like, well, it looks right. And then his face changed. He got offended. He goes, well, haven't you asked me to do this with you? And I was like, what do you mean? Like, you have a full-time job. You
Seem to like what you do?
Yeah.
I mean, what?
Do you want to? He goes, well, yeah, if you're making this, I want to. And I was like, all right, let's do it. And so, again, very analytical engineer. I was like, let's go look at the property. He goes, well, are you going to do it? I said, yeah, I'm doing it. He goes, all right, I'm in. Which is so out of character. I mean, it was so out of character. I was shocked. I thought he was joking. I was like, all right, well, let's go look at it.
He's never one to just jump in.
No,
Yeah.
ever, never. And so for him to do that, after I got over the shock factor and realized he was serious, I was like, I was like, holy cow, like I really hope I'm right, right? Because he's coming in now, like I can't lose his
A little bit
money.
of a weight on your shoulders there.
Yeah. But also I'm like, man, there's a lot of trust that goes into that.
Yeah.
So I was like, that's pretty cool. And so we flipped that house, ended up putting it back on the market for like 200, sold for 196, crushed it, made some great money on it. And then he's never looked back. And there's been a couple of those bigger apartment complexes I did with some other buddies. They brought me the deal. And then that development I did in Southside, there was a couple $1 million, like a big project. Right or wrong, I did not put him on there because of the risk. And this is...
And maybe there's other cooks in the kitchen. It's
Well, there
like,
are other
okay.
cooks in the kitchen, but at the end of the day, I'm like, man, he's close to retirement. Like, for some of those notes, we had to personally guarantee like multi-million-dollar notes.
That's not scary at all.
It's terrifying. Like, if this goes south, I'm losing my house kind of thing.
Oh, man.
And like, I don't feel good putting him in that position, because what if I'm wrong and his retirement that he spent 40 years building is gone? I'm like, I'm not living.
Yeah. I get it.
But then he's like, why don't you put, and then the deal, the deals worked out, everything went good, made some good money on it. And now he's like, why don't you put me in that deal?
Well, some of those bigger deals, and I think you spoke to one, is a major apartment complex that you guys ended up buying, and I'm doing the cliff notes here, and it was another buddy who was interested, and that was one of my early questions when I first met you, was like, how can I get into this? And you're like, okay, do this,
Yeah.
and this, and then come talk to me.
Yeah.
And you have a guy, you said of all the people that ask you that question, very few actually follow through.
Mm-hmm.
And this particular gentleman did, and was a part of this project that you ultimately, I think in your own words, said they made you an offer you couldn't refuse, and you all ended up selling it over there, not far from like Uptown area and stuff. But leading into the question, some of these bigger deals where it's like, whoa, man, like multi-million-dollar deals and a lot on the line, and you're signing over, and if the deal goes south, you lose your house. I can imagine there's a lot of like painstaking thought that goes into that. And even if you crunch the numbers 1,000 times, when you go to finally sign your name on the dotted line, is there ever a moment like, oh my God, did I just make a huge mistake? Have you ever had anything that really maybe didn't go the way that you wanted to, or maybe you're just always had to, crunch the numbers well enough to where it never really goes south on you?
No, not at all. Because the number side is not my strength, right? I'm more of the frontline acquisition. Let me just continue to pump deals in and then kind of let it flow from there. So yeah, we've had some not as great. I mean, fortunately we
never
haven't
lost your house though, I guess.
No, still in it.
Still in it. All right.
Haven't taken it yet. But yeah, it's a little nerve-wracking seeing 7-figure numbers on something that you're committed to when you don't have 7 figures. You're like, holy cow.
You gotta have nerves of steel, man.
But everything we go into, and this is another reason, like, I'm not sitting here telling you I've done thousands or even hundreds of investment deals, because I haven't. And it's because I am, again, quality over quantity, kind of the same mindset of anything that I invest into, I want multiple exit strategies out of. So I want, if it defaults, I want something else to kick in. If that defaults, I want something. So the true risk of losing my house is like close to zero, right? It's not zero.
It's very well mitigated.
Yeah. And so like flipping the house in Irondale, for example, we're doing right now. If I'm way off on my numbers and we, for some reason, can't sell it for what we need to sell it for, I know I can stick a tenant in there. And even if it loses a couple $100 a month, we're okay. We've got others that'll offset that cash flow. We'll be okay. Irondale they ban short-term rentals, but you can do month-plus long stays. So I can furnish it, put a travel nurse in there for 3 months at a time. I can cash flow. So I've got multiple exit strategies on everything I invest in, to where worst-case scenario is like if I miss on 4 different strategies, right? Which, again, hopefully that doesn't happen.
Cataclysmic.
Right.
Yeah. Okay.
So it's a calculated risk is what I call it. And that helps ease the pain of citing that dotted line.
Sure. Well, speaking to Irondale, just a few more questions. You said they ban short-term rentals.
Yeah.
What qualifies as a short-term rental?
Under 30 days.
Under
rental.
30 days.
Yeah.
Okay. So no Airbnbs or
No
anything like
Airbnbs.
that.
No.
But you could still do like long-term year leases and stuff like that. Okay.
Yeah.
I know Irondale is like a hopping area.
It is.
You mentioned that, and are there any other hot spots around town that you guys are been focusing more of your time?
Yes and no. Again, kind of follow the deal.
I guess the deal could be anywhere.
It could be, yeah. And again, I'm not chasing the smaller kind of stuff anymore. So
Right.
the stuff that I'm picking up that's like that is kind of handed to me or presented to me, and I'll underwrite it and see if it works. Bigger commercial stuff and multifamily, those are few and farther between, because the investors that play in that space usually on the level that I'd like to get to aren't one city focused. They're like, all right, I invest in commercial in the Southeast. I'm building a Dollar General in Wetumpka, Alabama, and I'm putting up a Publix in Alpharetta, Georgia, and like that.
Yeah.
That's a level I'd like to get to, but that's also like, and they diversify that much, because you're not going to find 40 opportunities, or maybe, but it's going to take a long time to find a number of opportunities in one little city to do that.
Yeah.
And so,
Just gotta get bigger and bigger and bigger.
yeah, just got to keep growing.
Well, dude, it's always great to catch up with you and hear about what you have going on. Thanks for talking, and until next time, man.
Absolutely.
Appreciate it.